all the live long day, all the live long day. I'll be moving along, singing my song.
I often get to work with clients who know they want to invest in real estate, yet don't quite know how to make it work for them. I mean, you remember how hard it was to save up for your first home. I mean, how can you imagine doing that again with an even larger sum for an investment property? Or I work with other clients who want to buy a home now, but can't find their perfect home with today's lack of inventory and multiple bids. Well, if this is you, then I have good news. With a little bit of time and patience and a creative real estate team on your side, you can tackle these obstacles and be closer to building long-term wealth. How? Well, let's consider some very real scenarios. Let's say you purchased your home 2 years ago with 10% down, and you've been making your regular monthly payments plus a little extra here and there. Well, now you're considering the purchase of an investment property, but you have a limited budget and maybe not so much in savings. Well, there are two options here. You could purchase that investment property and move into it as a primary residence. That would allow you to qualify with putting as little as 3, 3.5, or 5% down. Then the rental income received on the other units, if you buy a multi-unit, can be used to help qualify you for the mortgage. Plus, you get the bonus of a lower primary home interest rate. How about another option? Take the next year and rent out that basement bedroom in your current home and gain some flexibility on your budget. Well, now that you have some money in savings, you're ready to invest. But with the needed 20 to 25% down, you still might not have as many options as you want. So let's use the equity in your current home to help, specifically a home equity line of credit, also known as a HELOC. With a HELOC, you can borrow from the value of your home up to 90, sometimes 95% loan to value. Meaning, if your home was worth, say, $450 when you purchased it 3 years ago, now it might be worth $510 due to typical appreciation. But your loan balance is $370. That means you can borrow $90,000 or more. I mean, now you're on your way to building real investment wealth. So let's consider one more option, perhaps a little bit more complicated. Let's assume you bought your first home 3 years ago and then you moved up to purchasing your dream home last year. Well, instead of selling your first home, you opted to make it a rental. But because the cost of the mortgage and the rent in the area is not cash flowing the way you wanted, well, this is where 1031 exchange comes in handy. If you sold your first home and you made a total of, let's say, a couple $100,000 from the sale of that home, you can turn around and purchase an investment property that will have a higher cash flow with no capital gains taxes. Now, we get into a funky rule that if you own that last home for 2 out of the last 5 years, you don't have capital gains taxes. But let's say you were gone from it for more than 2, 3, 4 years ago. Well, by using a 1031 exchange, you're essentially exchanging one property for another without incurring the potential tax liabilities. So even if that first home that you bought isn't your forever home or your forever investment like you thought it was going to be, well, that's not the end of the game. The equity you've created simply by being a homeowner is continuing to build wealth, which is why the first property you purchase doesn't have to be perfect. The biggest obstacle in longer-term wealth through real estate is sitting on the sidelines. Owning a property means you're creating wealth no matter the type of property it is. Add a little creativity down the road, and you could be on your way to having your very own investment empire. If you find that you're missing a creative lender on your team, well, then please give me a call. Nicole Rueth, the Rueth Team, Fairway Mortgage. I look forward to serving you.